and it's all working. All right, so we'll get kicked off here. Like I said, it'll be recorded if you need to jump out. If we have some people jump in partway through, we'll just give them a quick hello and then we'll continue on. I'll do my best to keep an eye on that, see if a few more sign up here. But essentially today, we really wanted to just talk to you about how to understand really the basics, the principles around your business finances so that you can use them to leverage your business growth. I talked to a lot of clients through North Forge, through my own stuff, founders in general, and a lot of times I get the feedback that finances are scary, they're hard to understand, they're overwhelming at times. People typically get surprised at the end of the year when they do their taxes and find out what happened for the year instead of kind of knowing going in where they were headed. And so our goal today is just to really give you, Tim's going to do a great job of explaining kind of the common pitfalls or the things to look out for so that even if you don't understand the whole thing, you know enough to keep your business going in the right direction. And what I'm going to help talk about is now that you have that organized and you have your high level information, how do you make the most of it? How can you leverage it to actually help grow your business? How can you help it make decisions? And how do you use it to really understand what to do next? We'll have lots of time for questions. We've got a little bit of an offer at the end for you if you want to do some more work with either of us, deep dive on your business. And either way, we're just happy to continue the chat if you want to just talk more afterwards. So I'm Jordan LaBelle. You've heard me talk lots already. A couple of you already know me. I call myself a growth partner. So it's really what I do is help work with businesses to work with the founders who have an amazing product, who are starting to see success, but might not understand all the ins and outs of business. So I always see myself as kind of someone who can pull in all the different pieces of the business and make them make sense. From finance to marketing, sales, partnerships, development, design. I've kind of had to speak all languages, but I always work with experts in those fields. So I can help kind of make sense of the business. I can help you find information about your customers. I can help you find better uses for your time. I can help you set a strategy, make it measurable, run experiments, and then scale up once we find something that works. And we kind of loop that system over and over again, time, customers, strategy, and scale to just help you grow your business. And my goal is that eventually you don't need me anymore because you have all the tools in your kit to do it yourself and build your own team, or that you want to partner up and work together forever as just making sure you stay on track. But my goal is really to help you just get the business moving in the right direction and then partnering up with experts when we need expertise. Tim, tell us about
Oh,
yourself.
yeah, right on. No, thank you. Yeah, so my background, I'm a CPA CA. I worked with one of the big four accounting firms for the first 18 years of my career. In doing that, spent a lot of time actually doing kind of a test engagement, so doing audits. And my focus, oddly enough, now that I've worked with kind of small, medium-sized businesses, was actually in the public company space. And so I got really accustomed to the things that work well with big public companies. And then you try and draw the parallel between how does that apply to a small, medium-sized business. And I think for me, one of the passion plays is, I see small, medium-sized businesses that are poised to be really, really successful. They've got a great idea and they're going to be successful with whatever service or product they're offering. But some of the structure that underlies them being successful is missing, right? So many small business owners, as they're starting out, it's kind of you deal with what's coming at you real time. And so being able to work alongside small and medium-sized business owners to really help get those books in order, current, so that they can be making really good business decisions is a bit of a passion play for me. Balance is about 5 years old. So I've been doing this for a while now. And it kind of coincided with my wife starting her own business from scratch. And so I was watching in real time, this small business owner, go through the trials and tribulations. And so for me, that's the passion play. I love hearing about businesses. I love hearing about ideas. And for me, partnering with Jordan and then hopefully maybe with some of the other people on the call here today, it's about driving value for business owners to help them see what they aren't seeing and get expertise that they don't necessarily have that's going to allow them to get there faster. So for me, again, the background is accounting and knowing how critical that deep understanding of finances is a big part of the equation. So I guess that's it for me for now. I think, the way that I've looked at this, just to maybe kind of kick things off, pulling the slide decks together on common pitfalls, what I'm trying to do is leverage kind of the collective experience that I've had over the past 5 years and working with, both, starting companies up to medium-sized companies. And they cross, a whole stream of industries. Like we've got quite a number of clients. We're kind of in that 120, 130 client range and across a bunch of industries. And the pitfalls that I see happened, are not unique to every business, or sorry, they're not the same across every business. They're very unique. They will change by business owner and business owner approach. They'll change by industry. But what I've tried to do for the purposes of this webinar is try and distill that back to a summary of common pitfall areas that I see companies making. In thinking that way, it became really clear to me that the pitfalls actually kind of follow the life cycle of a business, in that you can categorize the pitfalls in a couple of areas. The way that I look at, Jordan, if you want to flip to the next
Yeah,
screen
you
here,
bet.
the way that I kind of have grouped the common pitfalls falls into kind of three categories. I'm not seeing the slide flip here, Jordan, if you
Okay,
are.
that's what I was wondering what was happening.
Yeah,
Give me 1 second. See, this
sure.
is the life of tech. There we go.
There we go. It's there now. Yeah. So I'm kind of grouped into three kind of category areas: planning and setup, operational and transactional, and then reporting and forecasting. And what I'm going to do is I'm going to kind of highlight three of the common ones in there. There are a ton of pitfalls that businesses fall into. But again, for the purposes of today, we're going to hit on the ones that I see happening most regularly with businesses. The really cool thing about this is it doesn't operate like, when you think planning, operational reporting, it sounds very chronological, and in a way it is. But this also kind of operates on a feedback loop, because you start off and you're planning for what you're doing currently. You work through the operational stuff, and along that way, new opportunities get identified. So you're working, and you get the financial reports, and all of that's great, but then there are more ideas. So you almost have to reset the loop and go back to the planning phase and think about what that means for the next stage of your business. So anyway, that's kind of what we're going to tackle today. And like I said, we're going to keep it to kind of the top three areas that I see most common. So in the planning and setup phase, Jordan, if you want to flip her there. There we go. So, I mean, the biggest thing that I see when new potential clients are approaching us is that the vast majority, like 95% plus of the new potential clients that come and see us, those small to medium-sized business owners know, they're looking for support. They acknowledge the importance of bookkeeping. Every one of them tells me they acknowledge the importance of bookkeeping and having their numbers up to date and their banks reconciled. Everybody gets it. They also acknowledge that it's an area that they tend not to be good at, right? Of course, unless you're running a bookkeeping company or an accounting firm, the bookkeeping, the understanding of the financials is something they don't understand. What's been really interesting to me, though, is that even though those acknowledgements are there, they seem to struggle to dedicating time and resources to making it work. And so, there's a whole host of reasons why that would happen. But, I think the most common pitfall is really just making sure, especially in the startup phases, that you carve out chunks of time to dedicate towards your bookkeeping and your accounting and reading and understanding financial reports. And then resources. One other really common thing that I see, especially in small businesses, the bookkeeping has tended to fall on the person who opens the mail. Like the receptionist, the number of times it's a receptionist who's been charged with bookkeeping because they got the mail, and they've been given access to answer phones that might deal with, like, following up on accounts receivable or accounts payable. It's a very common approach, and most of those receptionists are not trained in accounting and bookkeeping. And so we're going to see through some of the other pitfalls where some of that can go wrong, but obviously it's carve out time to pay attention and read, and then make sure that you give yourself the appropriate resources to drive the results that you're looking for. One of the first areas, that where things can go wrong is in the chart of accounts. So the chart of accounts acts like the skeleton of the bookkeeping for your company. You're only going to be as strong as the skeleton that underlies what you're doing. So the information that you need to pull out of your business in order to make good, strong decisions is directly correlated to your chart of accounts and what information it's going to allow you to drive out of those financial results. The other piece to that also is record keeping. Record keeping is really, really important. Obviously, we all know that we are required by the CRA to keep financial records for a period of 7 years. And one of the things that's really important is you keep that handy and you keep it up to date and you keep it organized, right? It's really a matter of when, not if, CRA or some other regulator is going to come looking for information. And the ability to have that at hand and to be able to kind of pass that on and answer questions that come their way through, if they're looking to do an examination or audit, really, really important. It can mean the difference between huge penalties and interest and maybe just a good, we understand where you're going and you're new and it's okay, we move on. So it can really have a significant impact to the business if you've got the right records on hand and ready to go. The other piece in that planning setup phase, we've kind of touched on it a little bit already here, is the failure to seek professional advice. Most small and medium-sized business owners are very acutely aware of where their cash flows are, and that needs to be an important consideration point for them. But one of the best pieces of advice that I try to give to our clients is make sure you surround yourself with good professionals, right? So a good CPA firm, a good lawyer, and a good financial institution or bank are absolutely critical, because those three experts at your disposal will benefit you in ways that you can't even appreciate, and it usually comes down the road in terms of when that matters. But obviously on the CPA side, they can give you a lot of good advice on ways to save taxes, both corporately and personally. Lawyers, can offer some great advice when you're structuring deals or contracts that could get hot water down the road. And obviously the banker, right? Every business needs to be able to access financing to keep going, and so having those professionals behind you is kind of critically important. And so some of the best advice there is just find people. The other really important thing to think about, I think, is the people that got you to where you are now are not necessarily going to be the ones that are going to take you to the next step. So it is kind of an always evaluate whether or not you're getting the value out of those external professionals that you feel that you need and or deserve. Sometimes it's just a matter of asking the question to that professional, and then they realize you're looking for a little bit more. Sometimes you may realize that you've kind of exceeded the skill set of that professional, and it's time to think about how you tackle, what might be coming at you next. So anyway, that's kind of the first set of slides here. Feel free, guys, jump in with questions at any point. Jordan, I'll get your help if an automated hand goes up, or just jump in.
Will do.
Yeah, no problem. Okay.
I was just going to say before we switch slides too, this time piece is so important. It's kind of a foreshadowing for a little bit what I'm going to talk about. Is if you don't have time carved out to be looking at those most important things yourself, especially, that's a common problem I see a lot of founders and clients, is that the CEO or the owner is doing so much that they just don't have the time carved out to really look at, do they have the right chart of accounts? Are they looking at the right professionals? How are things looking? So you'll hear me talk about this a bit more, but that time piece is so important. Doing a quick evaluation of how your time is being spent.
Cool. So I guess on the operational transactional side of things, one of the things I see happening, whether it's small business or medium-sized businesses, and it's super simple to fix, is mixing personal charges with business charges. And I get it. I get the underlying reasons for it, right? Everybody's got a credit card that's got, a point system, and you want to capitalize on those points. And that's great. But I think, just bear in mind kind of the challenges that come down the road when you do that. There's a lot of time that needs to be invested kind of at an end of a year to split out what's personal and what's business. And at the same time, that can create a lot of uncertainty in terms of where the financial results for the company are ultimately at the end of the year. Typically in these environments, it's shareholders, and there's a shareholder loan account. And a shareholder loan account is important because it's obviously in money that's been, put in and taken out of the business on an after-tax dollar basis. And so, it's if your shareholder loan goes out of whack, where you maybe thought that the company still owed a lot of money to you as a business owner, but in fact you've now drawn more money out of the company than you had put into it tax-free. There's a whole bunch of tax implications that come on down the road when you get to personal tax time. And so try and find ways to, monitor and keep track of things along the way is great. My best advice is, try to set up a separate, set of accounts, bank and credit card for the business. it will save a ton of headaches, especially when you get to that tax time of the year and you got to figure out where you're going to come up with taxes on 10, 15. I've seen 50 or $100,000, and that's not always easy for people to figure out where you're going to get that money come end of April. Um, yeah, I think that's kind of that piece. Overlooking tax deadlines is another one. Everybody knows about taxes, but there are different frequency levels, right? Businesses have the opportunity to say, we want to file our GST annually, quarterly, monthly, and the decision on what that frequency is, it's driven by the business and all of that kind of stuff. But I think the main message here is there are significant penalties, whether it's a federal program like federal taxes or provincial taxes, if those tax filings don't happen on time. It can, and the interest rates that the government charges, hopefully you guys don't know because you're not paying those interest rates, but they're getting pretty substantial. And so, making sure you know what your tax deadlines are, and filing is absolutely one that I've seen businesses get into some real trouble with, before they start working with us. Yeah, and it's not a fun place to be. It's a lot of stress and anxiety on a business owner to even, I've dealt with lots of business owners that just don't even know, and that's scary. So be aware and make sure you're paying attention when your tax filings are required. And then the last one is, I think, really just underestimating the importance of documentation, especially, as businesses are just starting out. Again, things are happening, in real time. And as a business owner, manager, you're dealing with like 10 different hats. And it's hard to keep all that stuff straight. And sometimes you don't think about it, but there are a lot of details in the minutia that can get lost if things aren't properly documented. I've seen some cases where, a business has needed to go and find, maybe outside private finance in order to help them kind of keep going with cash flows or to do stuff like that. And there's a great relationship between the business owner and that outside capital. And I've been around the block long enough to see those types of relationships deteriorate. And if there's no documentation around the agreement in terms of, interest or repayment terms or all that kind of stuff, over time, the memories of what was talked about fade. And if there's any kind of animosity between parties, that can get really ugly really quickly. And so it's just important if you're going into some kind of new stream of business and there's an element of finances, dollars into the company, dollars out of the company, just really important to think that. It doesn't have to be a legal document. Don't necessarily have to go to a lawyer, but get something down and documented so that you can go back to your notes and you're not left wondering. Again, it'll save a ton of headaches to the business owner.
On that, you said something really important. I think, especially for service-based businesses, there's a really good principle I like to use of like, what have you done for me lately? So the more you can remind people of what you've done or stay in communication with them, especially if you have like a longer tail service offering. So throughout it, you can remind them of like, here's what got completed, here's what got done. So that by the end, it's not like they haven't heard from you for a month and all of a sudden you pop up. And then it's also harder for them to, maybe be frustrated with like, if something happens, they won't come to you first thinking that maybe the source was you that the issue came up, because they'll have seen your progress the entire time. So a good reminder, especially if there's a big lapse between initial contact and contract to completion, just look for touch points. Stay in touch, have those conversations, because then much more likely they can result in a good resolution at the end.
Percent. Yeah. Okay. So then kind of on the reporting forecasting side of things, what I see often, and this kind of ties back to the first slide where we talked about making sure you have the right chart of accounts set up, that skeleton of the business. A lot of stuff happens over the course of the year, and the business evolves and changes. And it's as those evolutions and those changes happen, make sure you're tracking the expenses in a meaningful way so that you can drive decisions. What I've seen happen over time is not having the proper tracking of expenses, can really lead to poor business decisions, because there's things grouped together that really shouldn't be grouped together. Bad pricing for product and service. If you're looking at your revenues and you're saying, okay, what does it cost me to drive those revenues? So your cost of sales, if you've got a bunch of costs that are kind of buried into more office expenses or overhead type expenses, and you're not capturing that as a direct cost of driving revenue, you're not going to be getting the profit margin that you think are getting, and that can have some pretty significant impacts. There's also potential for missing deductible type expenses. So again, some of these expenses are deductible to your business, some are not deductible to your business, and you could be leaving stuff on the table and maybe not tracking GST the right way, so you're not getting your right input tax credits. Just really important that looking at your business and understanding where your money's going, so that you can drive some really good decisions off of that is really important. Another one that I see an awful lot is again, just because the background and training is not in accounting or bookkeeping, really not understanding what it is that the financial statements can tell you. And so how do you read your financial statements? What is a balance sheet? Why does it matter? What is an income statement? Why does it matter? Again, everybody seems to realize how important it is to know it, but very few have actually gone the route of understanding what those reports are meant to tell them and what they should be looking at from those statements. And of course, what ends up happening is when you're not comfortable with something, you don't know it, you kind of get those reports and you put them off to the side. So you just kind of ignore the good information that's coming at you. And so obviously the advice here is find a way to get some education for yourself on those financial statements and stop ignoring them. Reach out to the CPA firm that you work with. Reach out to your bookkeeper if you're dealing with like an outsourced kind of arrangement like ours. Reach out to your bookkeeper and ask them to go through things with you. It may cost a little bit depending on the relationship and what you're going through, whether it's a CPA firm or your bookkeeper. But I guarantee that the information you will pull away from it will be extremely helpful to you along the way. And it doesn't have to be a one and done kind of thing, right? As questions pop up, challenge your professionals, advisors to help you get the answers that you're looking for. I think the last one is kind of the interesting one for me because it's actually one of the most rewarding elements for me on the bookkeeping side. I mentioned my passion play is to see our clients' businesses do really well. And so over time, and it does take a bit of time when we start working with a new client to get lockstep and really understand where they want to be going, where they are currently, and how we get them there. But one of the things I see happen all the time, and I get really excited about it, is when we've been working with a client for a while, and we get them to a place where their books are up to date and that they're current, and then the client starts to trust. They understand their financial statements and they start to trust what's in those financial statements. Without fail, it's almost like a light switch moment in a business for that business owner. All of a sudden, they now go from reacting and feeling out of control to taking control and looking forward. And I absolutely love when we hit that point. And actually, that's one of the most exciting things for me working with Jordan now is that flip, because you're flipping from just surviving to becoming strategic to drive more results. And so again, for those who were at the start, one of the big things for me is trying to find additional ways in what I do from a bookkeeping perspective to add more value to our clients. And so strategic partnering with folks who can help them on the strategic side, it, again, just allows me to feel even better about how we've been able to jump in and help. And so this is, probably a really good segue, Jordan, over to your slides. But maybe we do a quick pause if there are any questions or a deeper dive anybody wants to kind of jump into from bookkeeping pitfalls. There are a ton more. Obviously, what I really tried to do is kind of highlight a top 3 in each of those categories, but happy to take any questions.
This is exactly why I love working with experts in the field, because I'm learning so much by just sitting on this call as well. And to Tim's point at the end, it'll come up in my slides as well, but thinking through what kind of value you can add to your clients outside of what you directly offer them is such an important part of growth that I think a lot of founders overlook. They're focused on providing their service as much as possible to as many clients as possible, but always asking that question of like, if I know my clients have the problem they're coming to me to solve, what else are they likely trying to solve, and finding partners to work with to add value and expertise in other fields. Like to Tim's point, he can now recommend a CPA to JP if he doesn't have one already that can answer his question about capital gains. Now he's added value to JP outside of bookkeeping and becomes a more valuable partner for JP to work with. So that's a common thing to look for, that I look for when I'm working with businesses, is what else can we solve? Doesn't necessarily mean you have to do it yourself, but you can find someone great and partner with them. That way your clients know when they come to you, you've got the answers they need. Okay, so I'm going to go through these. We got about 20 minutes left. I want to make sure I can get you all out of here on time because I hate meetings that go late. JP, you'll know that from time working together. I like to keep this on time. So I'm happy to chat with people more afterwards if they want to go a little bit deeper on any of these, feel free. But now I want to transition into, okay, let's assume you've got all of your finances organized and well taken care of. Now what? It can still be overwhelming when you look at them all. You might not know how to use them or best leverage them. And so I want to help you figure out what to do now that you're in this space. So when I start working with clients, I always like to come and look at a clean set of books so I can understand what's happening. And part of that is measuring what matters. Not every piece of data in financials or in a business altogether is going to be as valuable as others. So the first question you've got to ask yourself is, what actually matters in my business? What do I care about most? This is typically things like cash flow, like revenue in, like net profit, but there might be other indicators in there as well, which is kind of some of those key insights of how many new customers do you have coming in? So good books will let you quickly audit the number of net new records that come in as customers for your revenue items. Also, how often do those customers buy? Are they buying from you every 3 months, every 6 months, once and never again? That gives you a bit of an idea of patterns in terms of how often are people buying, what's their average lifetime value, LTV, you'll hear thrown around a lot. Such an important metric to know and such a key insight you can get from good, clean books. Without it, you're guessing. And I've talked to lots of founders who are. So if you are, you're not, for any of these, you're probably not the only one. And business is super tough. So don't take any of this stuff as like, why haven't you been doing it? And more, here's things you can add on to the success you've already been generating. But things like customer lifetime value, things like your gross profit per customer, things like your cost of acquisition versus customer revenue are all really important things to consider. And cost of acquisition would be, let's say you run a $10,000 ad campaign, you get 10 clients and they're worth $1,000 each to you, you're one to one. You've spent $10,000 to gain $10,000. Things like that are things that clean books can really start helping you figure out and see patterns in. And then what you can do is choose where to invest your time and money. Which problems are worth solving now? Which problems are they exist, but they can live for a little bit longer versus a problem that you want to address right away. So in that example of 10,000 spend to get 10,000 revenue, that's a problem you're going to want to solve right away because that 10,000 revenue is going to get eaten away by all your costs of goods sold or costs of providing the service, all your overhead costs of operating the business, your salaries, et cetera. And so that would be an area where you'd want to spend time. How do you make the product more valuable? So how do you increase your lifetime value of the customers? Or how do you reduce your cost to acquire? Can you get those same 10 customers for less than $10,000? These are the kind of some of the things you can start asking about your business once you have your finances in order. When it comes to measuring what matters, so again, you're not all data is valuable. You're going to want to spend time to ask yourself and identify what those key metrics are. So ideally, like 3 to 5. Don't overwhelm yourself with a ton. Find 3 to 5 that you really care a lot about, that you want to be measuring often, and that you can have on a dashboard or an easy way to go find them so you can see what's happening to them on a weekly basis, monthly basis, quarterly. So that by the end of the year, there's no surprises. You know what's been happening. You know what direction things have been heading. You want to look for those patterns. Again, frequency of purchase, how often someone's buying, how many net new customers come in. One really great pattern to look for is if you have a high number of customers who buy once and never again, you want to start incorporating some sort of reactivation into your business. How do you go back to them and stay in touch so the next time they have a problem that you solve, you're the first person they think of? I've talked to so many businesses that sell once, and if the customer never has a problem, they never talk to them again. And I recently talked to someone where they did a quick analysis and the customers who had a problem, so they were unhappy with something, reached out, got it fixed, bought 2 to 3 times more after that. Customers who bought once never had a problem, only bought once. So I part of it was like, how do you generate not a problem, but generate a reason to interact with them so that you can show them how valuable your ongoing service is, so that they do think of you the next time. And again, those patterns help. If you see a large number of your customers come through once, that might be a problem area you want to dive into. Versus if you have all your customers coming back and repeated numbers of clients, you probably want to go acquisition because you know your customers are really valuable once you can get them. You also want to look at leading versus lagging metrics. This is something we looked at a ton in tech for the last 10 years when I worked in that space. And I think is such a good concept that needs to be brought to more businesses. So a lagging indicator would be something like revenue, net profit, cash flow. That's what happens as a result of the things that you do. Leading indicators are the actions you take to generate the results. So how many phone calls do you make to acquire clients? How many proposals do you send out? How many follow-up emails do you send? you can start measuring those actions to give you an indication of what to expect in terms of revenue or profit or new customers. So trying to set up your metrics in a way that helps you see, if I do more of this, I should see more of this result that I really care about. That way, again, less surprises at the end, and you can take full control over the actions you take. You can't really take full control over the revenue you generate. That just happens based on the actions you take. Know your critical metrics. So again, this goes back to what data is valuable. Know what you care about the most. Make sure you can see it easily. Make sure it's not a pain in the butt to go get it, because the harder it is to go get, the less often you'll go look for it. And then start looking into some industry benchmarks. If you're in a fairly well mature industry, there will be ways to get industry benchmarks to look for things like, what is an average lifetime value of a client? What is an average cost to acquire a new customer? And you can start getting a sense of like, are you close? Are you really far off? And again, this is all what helps you find like, where do you invest your time? Because you can't spend investing your time everywhere and solving every problem. So in identifying key insights, again, you want to look for those the metrics that don't hit your benchmarks. So if you're behind where you think you should be, either where you just think you should be by your own assessment or some data you have from the market and industry, those are good indicators for places you want to start looking. So maybe your client acquisition is way more expensive than you think it should be. So maybe your client acquisition to lifetime value ratio is like 1 to 2. You're looking for like a 1 to 3 is just a common golden rule. If you spend if you spend $10,000 and you can generate 30,000, that's good. You could do better, but if it's not under that, it's not a burning problem. If you're at 1 to 1 or 1 to 2, that's somewhere where you need to invest in quickly, because that'll be a death spiral sooner than later. So look for benchmarks and look for metrics that aren't hitting them. Those are great first places to start. The 3 keys for me is always like, what does your lead flow look like? So how many new leads are coming into the business of people you can go talk to? How many of those are you closing into customers? And again, not surprising, lifetime value. Because the more you can increase lifetime value, the more every other action you take benefits your business. So if someone comes in and only buys your service once, you're leaving a lot on the table. If they come back to you and buy multiple times, you're getting better. If they come to you, buy multiple times, and you can introduce them to a bunch of partners that you have rev shares with, or that you can white label their services to solve your customers' problems, now you're really talking. Now, every time you acquire a new customer, you know you're winning in multiple ways and bringing in revenue in multiple ways. So again, lead acquisition, how many close oh, reactions are still on. How many close into customers? And then what's your lifetime value on those customers? So if you don't know where to start, I would at least get those 3. That'll get you into a good place for measuring your growth. And then lastly, start talking to the customers that you have. And I know it's sometimes difficult and uncomfortable to start, but I guarantee you, if you do this 5 times, it'll become less uncomfortable very quickly, and you will learn so much, you will wonder why you haven't been doing this sooner, especially if you can get to customers who didn't buy. So the ones that said no, who fall off, who don't return your messages on the proposal, try to reach out a little bit differently and ask like, hey, I just want to talk to you to find out a bit more about your buying journey. I realize we might not have been a good fit for you, but I just want to find out a bit more about what went through your mind when deciding who to choose. That is, if you can get 1 in 10 of those people to reach back out to you, you will find gold in those conversations. Listen to the words they use, the quotes they have, the things that were important. Make sure you balance this with asking, are they actually your ideal client? Like, are they a good fit for you? Because you don't want to go down rabbit holes of they just weren't a good fit, and that's okay. And you find that through this conversation. So you have to go in with a little bit of like, not everything you hear you need to react to, but it'll start helping you paint a picture of like, how do you better craft your messaging? How do you better understand the problems they're looking to solve? And I love this one. Try to pick out quotes they use or words that they use so that you can use those exact words in your marketing material. The more someone sees the words they use and the way they think in the marketing material, the more they're going to feel like you're talking to them. So the more specific you can make it, the more they'll see it and be like, hey, these people, like, they serve me, like people like exactly me. So I mean, like, if you can get your advertising down to like location based, exactly the size of business or customer, whatever kind of information you can get about them, if you target it really tightly and you can use those quotes you get from these conversations, I guarantee you will lower your cost of acquisition, because you'll just stand out so much more from the competitors who are doing much more general advertising. Even the good ones still do general advertising. Okay, and last piece, investing wisely. You know how much you can invest. Without clear books, this gets fuzzy. You think you can invest some money, you're not sure on cash flow. All of a sudden, you get to the end of the year, where's your salary coming from? Where are dividends coming from? All of a sudden, you've soaked up all the money in investing, which is great. I'm a big fan of investing into the business versus being more conservative. But you got to know if you overinvest, you can run into problems where you're just short on cash. All of a sudden, clients stop coming through for some reason, and now you're in a crunch. You're looking for loans, you're looking for bailouts. Not a good place to be. The better your books are in order, the more you can actually strategically choose how much you want to invest into solving these problems. And you can choose whether you want to invest more of your time or more of your money or a little bit of both. So first off, you got to know how much time and money you can invest. Once you know, look for skill gaps and time being used ineffectively. So if there are skill gaps on for yourself or your team, I'm a big fan of knowing what you're great at and trying to optimize your day around doing as much of that as possible and offsetting that with team members who are great at the things that you're not at. And it's totally okay to be a founder and not be great at anything. In fact, that's the best place to be. You want to be great at a few things and you want to build a strong team around you or freelancers, contractors to fill up the rest. Trying to be an expert at everything is just never going to work for a founder. Even if you are more of a generalist, you still need to find ways to balance out your time. But you can use this money to find people who can help you solve these problems. So if you have a cost of acquisition problem, you can find great marketing people who can help you build better campaigns that will get you customers at a lower cost. If you're struggling with lifetime value, you can find people who can help you create strategies around increasing that lifetime value and improving the funnel, which we can get into in a deeper dive conversation with anybody. But the funnel is a great place to look for problems of looking at everyone through that customer journey from start to finish. But that lets you really like use that investment wisely to find how to bring in the people or the experts to help solve those problems. Another piece, use experiments versus scaling. Don't go all in on something until you know it works. I find this so often people get money to invest, they buy a big solution, and then they just start using it all the time, not knowing if it's going to pay off or not. Try to do things in experiments first. Do it manually if you need to. Once you find something that works, then pour the gasoline on it because you know you're going to get a return on your investment. And then the last thing is build systems for the things that work. So once you have one that works, you want to build frameworks, you want to leverage AI, you want to look at people to build processes for you so you can take the human element out as much as possible and know how to scale it with which kinds of people you need to go do more of it. And that lets you, now that you've solidified this pipeline and this solve this problem, now you can solve it at scale. You can do it once, you can do it 10 times, you can do it 50 times. Hiring becomes easier, getting the results you want gets easier. And now you can move on to the next problem because you know that one's handled and it doesn't take your time or energy anymore. So Tim and I put something together. Just we want to work with people who would like to get more out of this. So whether you're looking to get a better sense of where your books are at, if they're in a good state, where are those opportunities to help improve them and get them into a more organized and leverageable position? What we're offering is what we're calling the small business breakthrough. So it's two-hour sessions, so one with each of us. You would do one with Tim to understand your finances and your business, to see how things are set up and get a sense of if there are gaps or areas that could help you get a better sense of how your business is performing and set you up for stronger growth. And then a 2-hour session with me where we go through your business and find those insights to help you grow. So I can actually sit down with you, identify what those key metrics are, help make sure you have systems in place to be able to measure them, and put together a short roadmap for here's your top 3 actions you can take to solve your biggest problems. It's 100% refundable because we both want to stand behind, like, we don't want to get paid for anything unless we provide value for the businesses that we work with. That's true for all of my services. I believe for Tim as you as well is,
Yep.
if you work with us past this, same thing goes for that. Unless we're providing value, we don't want to be paid. The goal is to help you be more successful by bringing in someone who can see things you might not be able to see. Again, working with experts and people who are strong at different parts of the business than you might be. We're giving a discounted price for people in the webinar because you showed the initiative to sign up, come out, interact with us. So normally we each charge about $800 for these services. If you book with both of us, your price is just under $500. Again, totally refundable, and we want to make sure it's valuable for you. So that'd be 4 hours between both of us. We should get you set up with confidence in your books and your finances. We should get you on a roadmap to growth and a good sense of where you need to go with a good set of directions and actions you can actually take to go do it. So if this is something you're interested in, I'm going to handle discovery calls for both of us. So you can get in touch with me. We can have a 30-minute chat just to see if we're a good fit, if this makes sense for where you're at in your business, if this is something that we think could actually help you. If it is, we'll go through and we'll send you proposals and contracts and invoices and all that fun stuff. If it's not, we'll stay in touch and see how we can help maybe in the future. But if you're interested in that, follow up with me afterwards. I'll be sending out an email with the recording with a page that just outlines what you get with this package. But I'm open to any questions you have just through email either way. And that's all we got for you today. So really big thank you for everyone to show up. It's great meeting you all. Happy to hang out for a little bit if anyone has any more questions they want to work through. And like I said, we'll be sending an email out with all the details for this and the recording of the session.